Turning to the new market tax credit year in review, in February 2010, President Obama helped start the year with a call for a 2-year extension through 2011 of the new market tax credit. Such an extension, as our listeners know, was ultimately passed 10-plus months later, on December 16, 2010. The extension provided $3.5 billion for 2010 and $3.5 billion for 2011. In April, the 2010 new market tax credit allocation availability, or notice of allocation availability, was released, with an NMTC application deadline of June 2, 2010. The CDFI fund ultimately received 250 applications for the 2010 allocation round. That's the same number submitted in 2009. However, the amount of allocation authority requested in 2010 increased by $1 billion to $23.5 billion, that being over the previous year. During 2010, the market for qualified equity investments, QEIs, has remained robust. Through the first 3 quarters of calendar year 2010, more than $3.1 billion in QEIs had been raised. That surpasses the total raise for all of 2009, $2.8 billion, and is approaching the $3.73 billion raised in 2008. Also during 2010, the IRS released 2 bits of guidance that were quite helpful to the new market tax credit community. First, they issued guidance on the leverage model, which clarified that recourse debt can be used to fund leverage debt made to the investor fund making a qualified equity investment. And then secondly, guidance clarified that the passive activity rules do not limit the ability of taxpayers to claim the new market tax credit. Now, unfortunately, the alternative minimum tax might and does limit the ability of individual taxpayers to use the new market tax credit. December 2010 saw both relief and disappointment to the new market tax credit community. Relief in that the new market tax credit was extended for 2010 and 2011, and disappointment in that the authorized amount was $3.5 billion versus the expected and hoped for $5 billion. There was also disappointment that the ability to offset the new market tax credit against the alternative minimum tax was not included in the final tax bill. And as I mentioned before, while the passive activity relief and clarification was issued by the IRS, since the new market tax credit cannot offset the alternative minimum tax, the ability of individuals to invest in the new market tax credits continues to be very limited. Now, looking ahead to 2011, in anticipation of an extension passing, Donna Gambrell had said in early December that the fund was prepared to make an award announcement in January 2011. Director Gambrell also foreshadowed a number of important steps that the CDFI fund is taking to enhance the new market tax credit program. For example, as I discussed in last week's podcast, the Urban Institute is conducting a comprehensive multi-year evaluation of the new market tax credit program. In February of 2011, the Urban Institute will gather new market tax credit project data that supplements existing CDFI fund administration data. This data will include case-style data collection related to 80 sampled new market tax credit projects, a survey of representatives of 380 qualified active low-income community businesses, and a survey of 380 local community economic development officials. Director Gambrell says the CDFI fund expects the report to be completed by the fall of 2011. In addition, Director Gambrell said the CDFI fund has been working with the Treasury Department and the Internal Revenue Service to propose several new measures to expand support for the new market tax credit program. Most recently, the CDFI fund worked with the IRS to try and determine whether the IRS regulations can be modified to encourage more investments in operating businesses. And we do expect something to be coming from this sometime soon. We just don't know how quickly we'll reach that period of time. We don't know what soon means. Director Gambrell noted that the process for reviewing and approving these measures is quite lengthy, and could only say that the process is underway and the CDFI fund is working very closely with the Internal Revenue Service and Treasury's Office of Tax Policy. So we'll find out how soon is soon. Treasury also continues its work on the targeted population and new market tax credit recapture regulations. Finally, we do not expect to get an update on the definition of low-income communities or redesignation of low-income communities based on the 2010 census results until 2012.